Hello, welcome to Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. The average cost of preparing a pot of jollof rice for a Nigerian family of 5 rose more than 4 times in almost 8 years, hitting 16,955 naira. The World Bank Index shows global commodity prices are rising after a steep drop in 2023. Plus, Zambian inflation hits a 26-month high. Hello, welcome to the program. I'm Ladi Williams. Let's get to the markets now. Starting with oil markets, see oil prices eased in early trade. Today's concerns about a potential slowdown in the U.S. economy with prospects for delayed interest rate cuts outweighed worries over the risk of expanding conflicts in the Middle East. So we're still seeing a lot of volatility right there in the oil market with Brent $88.20 a barrel, 0.2%. Getting closer to that $90 per barrel mark, and we see WTI crude still below $85 at this time, $82.94 a barrel, also up 0.2% this morning. Let's get a check on metals market now. We see gold prices are steady as risk premiums over tensions in the Middle East ease, while investors prepare for U.S. economic data that's coming out today. GDP for the first quarter, we're expecting that later. $2,337 as for gold, down about 0.1%, but we see silver shining at this time. It's up about 0.18%, $27.39 per ounce, and we see palladium holding on to that $1,000 mark by about $9 at this time, up 0.17%. And back here, we see the jollof rice index as the average cost of preparing a pot of jollof rice for a Nigerian family of 5. It rose more than 4x in almost 8 years, largely as a result of depreciation of the naira. That's according to a new jollof index report by SBM Intelligence. The report, titled Crisis at the Table, by SBM, an African-focused geopolitical research and strategic communications consulting firm. It shows that the cost of preparing a pot of the popular Nigerian delicacy rose by 314% to 16,955 naira in March 2024, from about 4,000 naira in 2016. The SBM report also highlighted that across 13 markets of Onitsha, Anambra State, that experienced the highest percentage increase, above 44%, with the cost of preparing jollof rice rising from 10,000 to 14,900 naira. We'll drill down more on that data come tomorrow. Well, some company news now. We see the Biscuits and Bakery Products Group of the Manufacturers Association of Nigeria held its AGM, where participants shared some practical strategies on how to reduce operational costs. Suggestions such as including views and suggestions of plant workers came up as ways to introduce cost-saving innovations. Our correspondent, Inijon Mekwa, reports.
And challenges of the Biscuit and Bakery Products arm of the Manufacturers Association of Nigeria is the focus here. The Director General of the association opens conversations by highlighting some worrying economic factors.
Nigeria is known to be, or was known to be, the biggest economy. But from what the reviewers are saying, we have dropped to the 4th. And that is not cherry news. We will require the resilience of sectors like yours to be able to take us right back to where we belong. I encourage all of us to sustain the resilience that we are known for, and to ensure that we are tenacious in terms of driving those values that will allow Nigerians to recognize that patronage of made in Nigeria products is the way to go, and that there is no nation, like I've said before, that will truly be developed without a vibrant manufacturing sector.
Some of the things I learned here today, I was telling them.
Ways to sustain their resilience is what the guest speaker came with. The plant director of Cadbury Nigeria PLC, Mr. Owen Akinwande, shares tips on innovation to reduce costs of operations.
Production cost is going up. It's going up by the day. And of course, inadequate infrastructure as well. So it's not just about the production sector alone. In our organization, we have the production, we have quality, we have the business part of it. The innovation has to be end-to-end. because everything adds up to our total manufacturing cost and the cost of goods sold. So it has to be end-to-end. So, and it's a rather radical manufacturing process, and it has to be both in process and in product.
Thanks. The biscuit and bakery products subsector of the Manufacturers Association of Nigeria is responsible for 57% output of the total production from the manufacturers, and stakeholders there say their output is currently challenged by macroeconomic headwinds. In John Mekwa, Channels Television News.
All right, let's get on to our first conversation now, looking at regulatory issues. We know the Securities and Exchange Commission have a leadership shakeup at this time with the appointment of Dr. Imomotumi Agama as the SEC Director General, and the board constituted in the persons of Mr. Bola Jomale, Executive Commissioner. We also have Mrs. Samia Hassan Usman, Executive Commissioner. We have Frana Chupogo, Executive Commissioner, and Mr. Lekon Bello, non-executive commissioners. Also, Mr. Kasimu Garba Kerfi, also as non-executive commissioner at this time. So we're seeing a whole shake-up there with the leadership. Well, let's get a sense of what's before this new leadership pending. We get what the House has to say, about these persons at this time, if they get, the thumbs up to carry on. Join us now is Professor Uche Waleke, Professor of Capital Market and Director, Institute of Capital Market Studies, Nasarawa State University. Join us from our Abuja studio. Great to have you on the show.
Thanks so much, Ladi.
So
my pleasure being here.
Fantastic. So talk to me about this new leadership, pending approval by the House at this time. What would you say are the issues, before this new leadership?
Well, I would say even the current leadership has done well in terms of improving the confidence of the market in regulation. I'm sure you will agree with me that the regulatory environment, the capital market environment, has improved, significantly. The current leadership at the SEC was largely responsible for the revised capital market master plan, and we've also seen that the same leadership was responsible for the launch of the e-dividend mandate, management system. So I think overall, amidst serious challenges, they have been able to, record some achievements, which I expect the new leadership to, to continue. When I talk about serious challenge, I'm particularly referring to the directive, by the government with respect to self-funded organizations, auto deducting 50% of their gross earnings, at source. That's to a large extent affected the operations of the SEC, no doubt. And I hope that this issue will be looked into such that the new leadership, doesn't have to grapple with such a, major challenge, a major drawback.
And talk to me about, some of the new cabinets we have there and the new DG. Tell me what you know about him.
Well, I think it's a fantastic team that has been put together. Again, not too far from what we also had in the past, or what, of course, the team that is currently in place. The new team, I would say, round pegs and round holes. That's the best way to describe them. Beginning with the DG designate, Dr. Timi Agama. He's somebody I've known for quite a while. It may interest you to note that in 2004 or thereabouts, we were together teaching in one institute in Abuja. The same year, I left for Nasarawa State University, to be a pioneer staff. He also got into the Securities and Exchange Commission. So That's to say he has been in the commission for 20 years. So he's somebody that understands the market. Again, our paths crossed when I joined the commission on sabbatical as chief economist and director of research. We worked very closely together. And even shortly before then, both of us were in South Korea on a study tour of the Korean capital markets, visiting Seoul and Busan, to study the derivative market in South Korea. He led a team then from the commission and also the exchange and some exchanges, including the current CEO of the Nigerian Exchange, that's Exchange Limited, talking about Jude Chiemeka. We are all there in South Korea. And the reports we did, I led a team of consultants, engaged by SEC at the time, under the leadership then of the acting DG, Mary Uduk. The report we produced was what has led to today the facilitation of the introduction of derivatives products in the Nigerian market, which the SEC, of course, as you know, has licensed about 8 derivatives products. So Dr. Agama is somebody I've worked with a number of times, and I can tell you that he's fit for purpose. He's a typical round peg in a round hole. He understands the market. He's been through many departments in SEC. At the time I was there, he was heading at one point exchanges and later registration. So I think he is a typical capital market regulator, and I have no doubt he will do well. And he's being supported by very experienced operators, capital market operators. Take the case of the Executive Commissioner Operations, for example, the very fine gentleman. He was the former MD CEO of NAST. Talking about Bola Jomale, NAST, PLC, an investment expert, and today he's the Executive Commissioner Operations. Of course, he is very fit for that. The Executive Commissioner Legal, Frine Achukwago, again, a very brilliant lawyer. When I was in the commission, she was also there. We worked together. Then she was in legal unit. So she also understands, what she's going to do. The Executive Commissioner Corporate Services, Mrs. Usman is bringing to the commission her experiences, at the Debt Management Office. So I think these three will really support Dr. Agama. If you also come over to the non-executive commissioners, they're also well known in the market. If you are talking about the Leko Bello, fine gentleman, stockbroker, former commissioner for finance in Ogun State, with a whole lot of experience. And then another popular person in the market there, Garba Coffee, MD CEO, APT Securities Limited. They're all well grounded. And of course, you talk about the chairman. The chairman, Meriga Aliyu Katoka, is also somebody that is well experienced. The chairman is from my second state. My second state is Nasarawa State, and he's from there. He's from Kefi, retired central banker. He retired from central bank for many years and has been in the financial sector. And it's important that he's also been brought in, because what's the function of the board? Essentially is corporate governance. Essentially is to ensure that the commission is, the management is, following the rules. The commission is being run well. The market is being run well. The financial system is stable. And that's why you also need somebody with, deep insights into the working of the financial system as a whole. So his experience at the central bank will go a long way to rub off on the effectiveness of the board. So overall, Ladi, I think the president, chose a very good team, and that of Dr. Timi Agama excites me because, as I said earlier on, I know he's going to deliver, and I want them to continue along the line of what Lamido Iguda has done. Lamido Iguda, no doubt, has done well himself and his team. He also, of course, has very fine people working with him. The likes of Dayo Obisan, and a very experienced, qualified fund manager that headed the executive, the operations unit. Okay. There's also Ibrahim Boyi, well experienced for corporate services, and of course, Regina Karawosa, who has been there legal. So the team has done well despite challenges, and I want the new team, to move the stage higher.
Thank you so much for giving us a great background there of the new leadership, we have at this time, pending approval by the House. But let's talk about some of the issues, before this new leadership. We know regulating cryptocurrency is a big headache for regulators now globally. And we see Nigeria's blockchain stakeholders, they've expressed hope and confidence, in this newly appointed Director General, saying that he's kind of he has a pro-crypto, background, at this time. What do you think will be his approach, at cryptocurrency at this time?
Well, I think the commission will strengthen what is already on ground. Well, as you know, all over the world, particularly in developed economies, we've had this tussle between who should be regulating crypto assets. And that's not surprising, given the, we say crypto asset is one asset that suffers a definition problem. You wouldn't know whether it's a currency, you wouldn't know whether it's an asset, you wouldn't know whether it's a commodity. So you find regulators, especially in other climes, battling, battling with a jurisdiction. In the US, for example, this battle has been between the Securities and Exchange Commission in the US and the Commodities Exchange and Trading Commission. But in Nigeria, it's interesting to note that it does appear that the central bank has recognized, or is beginning to recognize, that the Securities and Exchange Commission has a major role to play in regulating crypto assets, because crypto assets are more of speculative assets in our own case than currencies. So the central bank has also said that banks should only deal with crypto exchanges or crypto platforms that are licensed by SEC. And as far back as 2001, 2002, SEC came up with rules for regulating digital assets. I think even during that time, it came up with even capital requirements, saying digital exchanges should have a minimum of 500 million or so in terms of capital. There was a fee for filing fee, processing fee, and all that. And it also went ahead to define what digital assets are, digital virtual asset, platforms. So I think there is already a regulation in place. And of course, you also hear that a number of even crypto startups have even applied to the Commission for a license, talking about, I think, Luno and one Quidas also have applied. So that's to tell you that the Commission already has something, some sort of framework in place to regulate cryptocurrencies. So what this new board now needs to do is to up the ante, to strengthen it and to ensure that, only, of course, in conjunction with the central bank, only licensed crypto, assets or exchanges in Nigeria allowed to function. The likes of Binance, the likes of, Bybit, the likes of KU Coin, we have seen how devastating their impacts, have been on the economy. The other day, you had the EFCC chairman talking about, freezing 300 accounts linked to this P2P platform. So it's important that if they want to operate in Nigeria, they should come and formally register with the commission, and so that the activities can come under regulation. That's very important.
Yeah, I guess this new leadership have a lot of work, before them at this time. But thank you so much for breaking it down for us, Professor Uche Waleke, Professor of Capital Market and Director, Institute of Capital Market Studies, Nasarawa State University, KEFI. Thank you so much for coming on.
My pleasure, Ladi.
Welcome back. Let's head to the markets. Now we have Willie Bonga with the details at this time. And Will, just before you begin, just got breaking news.
Okay.
That the ZIG, you know the ZIG, the
Yes.
Zimbabwe gold backed currency, has lost value for the first time.
Oh my goodness.
Yeah.
Oh yes, we did see that.
dollar.
You know, it caught the rally for the, halted the rally for the stock exchange, and now we're seeing it losing value. We had so much hopes for that, currency, especially being that it's gold backed.
Yeah.
But we'll just wait and see. Maybe
we know
it's a strategy.
Central Bank in Zimbabwe was actually looking to weaken it, at this time.
Maybe that's the same. It's a strategy. Let's see how it plays out.
Exactly. Maybe the market might actually rally. That's the Zimbabwean stock exchange.
Maybe that's
with
what they're planning
weakness
to do.
we see right now.
Okay, thank you so much, Ladi, for that. And now let's begin with major equities in Africa, where sentiments were negative at intraday. Nigeria's NGX traded in negative territory, 0.13% down. We see penny stocks dominating trade in terms of top gainers and top losers. The big guys probably very hiding right now. So we see South Africa also down at intraday, 0.05%. And elsewhere, see Egypt's EGX is closed for national holiday, but it ended Wednesday trade in the red. And, as analysts expected, is well below the 26,000 level that was projected. We'll probably be seeing more declines for that exchange. Now, we see expectations are also high for Kenya's stock market as it turns bullish. The index closed Wednesday's session in the green, 0.38% up. As these sentiments come in, the NSE has witnessed a remarkable growth, recording a substantial 22.97% increase in the first quarter of this year. Now, let's check out activities at the fixed income market. Let's bring in Chuka Nwachukwu, is the group head, Asset and Liability Management, UBA. Hi, Chuka. It's good to have you on the program. Chuka, let's quickly delve into the results from yesterday's Treasury bills primary market auction, where we saw an oversubscription, yes, of over 254%. Can you walk us through the details of that auction and why we are seeing this strong demand?
Well, thank you, Viol. Like you might rightly mentioned, we saw a suspicion of, well over 700 billion. In fact, to be precise, 725 billion was the upper suspicion from an offer of 142 billion. However, about 333 billion was sold. The stop rate remained the same, 20.7 from the last auction. The interest is there. However, what has hampered the interest, especially in terms of oversold, in terms of sales, was the fact that the system liquidity has played a major role in the fixed income market. The system has been in deficit of well over 1 trillion. Though fact came in there yesterday, but then that didn't do much to alleviate the tightness in the system, and so that's what kind of like affected the auction. Yes, this is a good level to buy. A yield of 20.7. In fact, anything above 19% for 1 year, is a good yield and a good is a cue. Let me use the word for investors.
Fantastic for the NTB auctions. We'll look forward to other auctions that will be taking place. But we're seeing that the total demand for treasury bills in the first quarter stood at about 21 trillion naira. Second quarter, as we mentioned, there's an oversubscription. It appears to be kicking off strong. But should we expect similar trend in the second quarter as we saw in the first quarter?
Yeah, if you look at government deficit, that is well over about 9 trillion, is obviously indicate that the government is looking to borrow more. And so, obviously, government is not hasn't exploited the international market yet. So everything is still within the local market, and that's why we've seen, this huge suspicion. In second quarter, for example, the quarter you just mentioned, well over 6 trillion, was sold in the market, and that gives you an idea what government is looking to. The level of the participation the government has, and in terms of trying to meet this deficit. To the question of if we expect it the next quarter, I think that if you look at the last auction, you see that gradually government, DMO and CBN is beginning to reduce the amount sold. For example, the last auction before this, well over 900 trillion was sold, and this one was just about 300 trillion. So I think that government, I believe that they obviously has met or are almost close to their target. And so that will let us seeing a little bit of reduction in terms of what is being sold, and that also will also tell you in terms of rate, which stood at the same level, irrespective of the fact that liquidity is quite tight. And so for me, I think that going into into this next quarter, we will see downward trend in the yield. By the time the part of the strategy put in place by the CBN begin to kick in, I'm hopeful that the next inflation figures will thin down a little bit, and then we'll begin to see some of these effects. So that will that obviously has we show you that the government has met part of their demand, and then this will going forward we probably might not see the 1 trillion offer or 1 trillion sold.
So what instruments are market players looking at as we speak, and what end of the curve are they playing at?
I think on the bond side, 2034 has been very active, irrespective of the fact that the system liquidity is tight, but we've seen bullish sentiment in the 2034. On the T-bill side, for example, we've seen a lot of bullish sentiment in the 1 year. The 1 year, like I mentioned, they came out at 20.7, and so it's currently trading around the 19 levels. So a lot of interest is on the longer, on the 2034 on the bond side. Many of this interest is basically, before now, many of the interest is basically on the local side, the PFAs, guys, and other. But then the APIs are beginning to come in, and so we're beginning to see some of this huge interest in the bond. But for now, liquidity is playing a major role, and that has actually affected the bullish sentiment in the market, and also affected the yield curve as well.
Thank you so much, Chuka Nwachukwu, Group Head, Asset and Liability Management, UBA, for sharing your insights on Business Incorporated.
Thank you.
Let's check out now. Middle East markets. Major equities in the Gulf traded mostly positive at intraday. See Abu Dhabi up 0.01%. Dubai is also up 0.03%. Now, Dubai-listed Emirates Islamic on Thursday reported a record 35% in the first quarter of this year. Net profit increase of 811 billion dirhams. That's about $221 million. Now, still within the region, we see Saudi down at intraday 0.59%. That's the lone gainer in that region. And the Qatari index is up 0.01%. Looking at the U.S. market, stock futures fell today after tech giant Meta Platforms reported quarterly results that disappointed investors. Future ties to the Dow Jones dropped 0.36%. We see S&P 500 futures 0.6% down, and NASDAQ futures 0.54% down. Now, Meta plunged 15% in extended trading after the social media giant issued light revenue guidance for the second quarter. International Business Machines, that's IBM, fell 8% after missing consensus estimates for its first quarter revenue. Now, traders will be watching out for the first quarter GDP reading that's coming out today, as well as the weekly jobless claims that's also due today, but we'll keep an eye for that. Let's look at Asia markets very quickly and see how that region performed. They closed the markets today mostly in the reds. Japan led losses in that region, 2.16% down. The Kospi in South Korea, we see that down 1.76%. And then we look at China, we look at in Hong Kong, we see the index there's up. They bucked the trend, the negative trend there. They're up 0.48%. Now let's look at China. That's mainland index in Shanghai. We see 0.27% up. And then the S&P ASX index is closed for a national holiday. That's the Anzac. And we're seeing that's the close for yesterday, 0.01%. Ladi, you know that the Anzac is a very important holiday in Australia. It's considered arguably one of the most important national holidays in the country. And so
I guess investors can take a breather,
from the market.
Well, quite an interesting story with Tesla there, getting a nice surge, yesterday about 9%, that's about 40% down, year to date. So I'm wondering, is that Tesla stock out of the woods yet? I guess that's what's on investors' minds.
Sentiment seems to be bullish at the moment because of, the robo taxis is talking about, but Some are saying it's not going to be a big thing for the next 5 years. You know, that maybe it's going to be a thing in the next 5 years, but not now. Maybe it's not what we're looking for. But, you know, Tesla, he always thinks ahead. Let's just see how that plays out.
And investors are looking for bullish stories right now for Tesla, just to save that stock. Thank you so much, Will, for the details there. Well, let's take it on to London now. We have Juliana join us from our London studio. Great to have you, Juliana. So we see data out in the UK shoplifting. It's the worst in at least 20 years. About 430,000 offenses logged in 2023, much higher, than 2022. I guess the retailers are having it quite bad, or they had it bad in 2023 when it comes to shoplifting.
That's absolutely right. Good afternoon, Laddie. It does appear, if you have a close look at the data that was released this morning by the National Crime Agency, that thieves in England and Wales are getting much bolder and more aggressive. And I think this is a running theme that we've seen since the lockdown. I think a lot of people will probably blame this on the cost of living and the fact that, people, if they can't eat, will steal their food. But I think it's so much broader than that. And again, it comes a lot to aggression, because separately from the National Crime Agency data, the British Retail Consortium have also shown that the growth in shoplifting is also coupled with staff being physically assaulted, sexually harassed and spat on. So there's a really big problem. And it's not just lifting from stalls, so it's not just people taking an apple or nappies so they can keep their babies warm. I'm sure you must have seen it on social media, Laddie, where you've got those grabbings. So lots of people, especially when you're in central London, which is basically right where the Channel's TV London bureau is, if you're walking around on your phone, a lot of thieves, very brazen on their bicycles, are lifting and snatching phones. In fact, lots of celebrities from Nigeria who have been in the UK have been robbed, including Tiwa Savage quite recently. So it's a massive issue, and it's not just data and statistics. This leaks into politics, of course, because we've got local elections on the 6th of May, and Sadiq Khan, who is the current mayor of London, is facing lots of criticism. He is trying to be a mayor again. He's a Labour mayor, but then they're looking at the state of crime in the city. In fact, that data from the National Crime Agency also shows that robberies are up 13%. Knife crime has increased 7%. Knife crime, of course, a stain on the black community, particularly the Nigerian community in the UK, because there is so many of us. So yeah, not great statistics. You've got to be very, very safe and have your wits about you when you're in the city of London, and according to the data, in other regions around England and Wales too.
Right, I guess the retailers have to spend more now on security at this time. But I guess we have more earnings in the UK at this time. Sainsbury, we see their profits up, sales down for Nestle. Tell us about some of the latest earnings out in the UK.
Yes, really big, we're bang in the middle of Q1 trading season, so we're getting a slew of updates. Banks, I suppose the big one has got to be Barclays. They've actually seen their profits fall 12% in the first 3 months of this year, so £2.3 billion pre-tax profits. If you compare that, it was £2.6 billion this time last year. Pretty similar issues that we heard from Lloyds yesterday, who had a 28% profit drop. And that's because of the mortgage sector in the UK. It's been really competitive after struggling because of Trussonomics. It now became competitive. People got back on their feet. So banks that were used to a slew of customers are finding it really difficult to attract and retain them. So that's the issue with Barclays. As you mentioned, Sainsbury's, which is the second largest grocer by market capitalization here in the UK, they've had a bumper 3 months. Their revenue is driven up 27%, which is massive. And again, that's because it is competitive, but they've been able to win loads of customers from some of their rivals, particularly those offering cheaper options for customers like Aldi and Lidl. Sainsbury's bosses have said trying to price match against those lower competitors has been really good for them. even though it's not a UK company, worth mentioning the slump overnight stateside on the New York Stock Exchange of Meta, despite the fact that Meta have increased their revenue in the first 3 months of the year by more than 27%, over 130 million US dollars was wiped off their stock market, their market capitalization in out-of-hours trading, because Meta bosses said they're going to increase their spend in artificial intelligence products, which is really interesting, actually. It seems as if investors are not sure about that. Meta, of course, are the owner for Instagram, WhatsApp, and Facebook. Yes.
Yeah, quite interesting. I see AI all over my WhatsApp and Instagram at this time. Not using it yet, but it's just there, at this point. Well, how are stocks looking in the UK?
Pretty good. Apart from the local 250, the all-share, the blue chip, is up 0.51%. The FTSE 100 is up 0.60%. And the FTSE 250, the domestic market, that's down by 0.03%. Some major issues with Burberry, suggestions perhaps that there could be a sale of that firm. In currencies, the British pound is currently trading up against the US dollar by 0.46%, up to against the euro by 0.19%, and the British pound is trading up against the Japanese yen by 0.68% at intraday, Laddie.
All right, Juliana, thank you so much for the update from the UK. Thank you. All right, let's take it on to Europe now. See, TikTok's been one of the fastest growing social media sites over the past few years, but it's also been controversial from the very start. Now the EU is discussing a ban, as Holt is with DW and has details. Great to have you, Lars. So what's behind the latest discussions in Brussels?
Thanks for having me, Ladi. Well, this is first and foremost about a new service TikTok has recently launched. It's called TikTok Lite, and within the EU, it's only available in France and Spain. It is not available here in Germany, which is one reason why I haven't looked at it personally. The other reason being that I'm probably not part of the target audience here. There will be younger people, teenager, and especially, it seems, minors, and that is where the problem lies. TikTok Lite is offering those kids points for watching lots of clips and for inviting friends. And the more clips you watch, the more points you get. And these virtual points can actually be exchanged for real money to be spent on Amazon or other sites. It seems pretty clear that this incentive program is likely to be addictive for kids, and that is the EU's big concern here. The EU's Digital Services Act bans so-called dark patterns, which are manipulative ways to keep users on platforms longer, and TikTok Lite is running afoul of that. The Commission in Brussels has asked TikTok owner ByteDance to run a risk assessment and respond to some questions. Now, ByteDance has actually done that. It has just filed a risk assessment report, but that obviously won't solve the problem at hand.
Yeah, people love that internet money at this time. So this has nothing to do with, TikTok being a Chinese-owned service?
Not really, but there is a second case being debated in Brussels, and that has to do with the company behind TikTok being Chinese. According to a study the EU Commission has seen, TikTok allegedly tends to feature and promote pro-Beijing content on its app. Also, ByteDance, again, that is the owner of TikTok, is accused of not having provided a sufficient level of data privacy and has thus broken EU law. Now, that law, again, would be the Data Security Act that I've just mentioned, and that one actually comes with huge fines. The EU can levy fines of up to 6% of a company's annual revenue, and in the case of ByteDance, that would be billions.
All right, how are the markets looking in Europe?
Well, there's a couple of quarterly reports out. We're in the midst of earnings season. One of them here in Germany, the country's largest bank, Deutsche Bank, has reported very strong numbers. That's likely to give stocks a boost here. On the other side, we'll likely see some weakness in tech, and that is after Facebook's parent company Meta gave an update on its current quarter. The company is investing heavily in AI, as we know, but they're spending a lot more money than investors had been expecting, up to $37 billion this year alone. alone, apparently in an effort to catch up to others in the business. So that's a lot of money, and it spooked investors. Later today, we'll get updates from Alphabet and Microsoft, so more news from the tech side.
All right, Lars Halter, thank you so much for the details. All right, now let's move on to other stories. See, although credit to the private sector has increased by over 93% as January 2024, small businesses are still squeezed for funding because of factors which range from character and to risk to lenders. Well, the former managing director of the Bank of Industry, who was a guest on Business Morning, suggesting emphasis on shared risk schemes. Take a listen.
In other climes, we have a credit culture. From childhood, you know that you need to have a good credit score to thrive in any society. Even to have a phone plan with a GSM operator, they'll check your credit. To rent an apartment or purchase a property, in anything you want to do, they check your credit. Because the credit score says a lot about you. So we need to put in place a lot of things in our ecosystem that will de-risk potential lenders who we deal with in the market. So we need to have rating agencies. Like in India, they have what they call the SMERA, Small and Medium Rating Agency, Small and Medium Enterprise Rating Agency of in India. And that speaks to the credit corporation, Consumer Credit Corporation, that has just been floated in Nigeria. For that corporation to work efficiently, they need to address the credit culture of Nigerians. I mean, I have immense confidence in the young man who's been appointed to lead the system there. One of the things he needs to do, advocacy role, is to ensure that we have a good credit culture in Nigeria.
And to other African countries now, we see Zambia's annual inflation rate climbed to a 26-month high and may continue to increase as record drought in parts of the country has renewed weakness in the currency, and that's also lifted prices. Consumer prices rose 13.8% in April, compared with 13.7% last month. That's causing, according to the Statistician General there, says prices rose 1% in the month from 1.2% in March. And global commodity prices are leveling off after a steep descent that played a decisive role in reducing overall inflation last year, which could make it harder for central bankers to cut interest rates quickly. That's according to the World Bank's latest commodity markets outlook. The report also shows a major outbreak of conflict in the Middle East could halt the inflationary decline and has occurred over the past 2 years. Between mid-2022 and 2023, global commodity prices fell by nearly 40%. Looking at other commodities at this time, we've seen the price, recent developments in the palm oil sector in Nigeria. We've seen prices increase from about 25,000 naira per 25 liters in January 2024 to about 40,000 naira per 25 liters in April 2024. That's depending on your location, in the country at this time. Let's get a check of what's driving prices now. Joining me is Teva Kumeka, Manager, Economic Research and Financial Derivatives Company. Great to have you on the show.
Good afternoon. Thank you for having me.
So talk to me now. What do you think is causing this complexity in the palm oil sector in Nigeria?
Yeah, what you just read, the increase in the price of 25 liters of palm oil from 25,000 naira to 40,000 naira, that's about 60% increase in 4 months. That shows that food inflation is what is causing inflation in Nigeria. But let's look at the global market. The global market, the size of the palm oil market is was about $70.44 billion in 2023. Currently in 2024, it's around $73.8 billion. Out of that size of palm oil market, key players like Indonesia and Malaysia contribute about 85%. So Nigeria and the rest of the world are left with just 15% to contribute. So why are we importing more when we ask? Palm oil, we know, is used for so many things, domestically and in the industry and other uses. So Nigeria contributes just 15% of the global supply with other countries. So how do we meet up with the fall in demand? There are certain things that affect the palm oil sector in Nigeria. this seasonal and then location, like you mentioned in the introduction. The season for harvesting palm oil is around March and May, while October to December is when the product is very scarce. So what is affecting the price of palm oil in the market is a supply gap. Yes, Nigeria is one of the major producers, but we contribute less than what Indonesia and Malaysia contribute, because the exports of Indonesia and Malaysia combined is about 75% of the market. So how do we make up with the shortfall? We need to import. And like I said, the value chain, where do we belong? Do we export the crude palm oil, the CPO, or how do we add value so that we add to our domestic use and the industrial use? Palm oil is very important, but if we don't produce as much as we need, then we need to import. So the shortage in domestic production and there's increase in demand, then we're likely going to see a continuous hike in the price of palm oil.
Okay, well, we have data from the EIU suggesting, though palm oil production has started to, increase seasonally, stocks are projected to continue to fall over time. What do you think is responsible for this gloomy forecast for production?
Yeah, the EIU data shows very incredible results. We expect the sector to grow by 1.9% in 2024. But there are a bit kind of reduction in the overall forecast. There are certain things that affect that sector. One is the climate change. Climate change affects the farm produce. We have what we call the El Nino effect. The El Nino effect is a situation where the Pacific Ocean the temperature increases, the weather becomes warmer. That change, that El Nino effect, affects the wind flow. The wind flow increases temperature in certain regions of the world. That affects productivity in the palm industry. Another issue we noticed by doing a deep analysis of the palm oil market, we discovered that there has been a shift of late from palm oil to other kind of oil, like the rapeseed oil and the flower seed oil. The data you read from the EIU, we saw that palm oil per million ton is around $1,000 or above. That is likely going to increase in 2024 and 2025. But if you check the price per million ton of rapeseed oil, for example, it's around $600. So, and palm oil is used for biofuel, which is a good source when we're talking about renewable energy and sustainable development. So, because of the increase in the price of palm oil, we see industrialists, manufacturers that use palm oil move to a more cheaper source of oil, which is the rapeseed.
So much, Teva. It was great having your perspective there. We'll keep tracking palm oil prices, see how it plays out for the year. That was Teva Kumeka, Manager Economic Research at Financial Derivatives Company. Thank you.
Thank you very much.
All right, let's get a check on other markets now to get a sense of what's happening in the crypto space at this time. We know it's red, at this point, red on the screen with just few pockets, just about 3 pockets of green right there, showing that there's still profit taking right here in the crypto market at this time, with Solana deep in the red at this time. Let's take a look at the top cryptocurrencies that we track. We see that prices are quite low at this point, 3.76% drop, big 5% drop. That's for Cardano at 46 cents, XRP 52 cents. Didn't really move much, even though we saw that big rally from Bitcoin, 4.36% down. So we're seeing big drops right there in the crypto space. Let's bring in Gilbert Jopata now, financial market analyst. Hello, Gilbert.
Yeah, greetings, Mrs. Ladi. Great to be here.
Great to have you, Gilbert. So I checked on CoinMarketCap, where you find all the cryptocurrencies at this time, and I saw the over 2 million cryptocurrency projects listed, on CoinMarketCap at this time. And I remember sometime, before, maybe 2017, 2016, it used to be quite hard to get on CoinMarketCap to be listed or get your project actually listed. But we have over 2 million at this time. Global stocks are not more than about 55,000 right now. That's publicly quoted stocks on markets, about 55,000. Why do we need over 2 million cryptocurrency projects?
Okay, this is actually a result of mainstream adoption and then knowledge. And I'm going to tell you why. When we got into the cryptocurrency industry as early as we did, initially, we were coming from where we needed persons to understand what cryptocurrencies are, and most persons who came into the industry came in with more of a speculative knowledge. But it has advanced beyond speculation at the moment, and a lot of persons now understand the development process of creating cryptocurrencies. So there are a couple of reasons why you could see a whole lot of these cryptocurrencies out there, unlike how we started. One is lower barrier to entry. Creating a new cryptocurrency is significantly easier and cheaper than launching a publicly traded company, like in the stock market, that has to do with a lot of regulation requirements and fulfillment before you could actually get into the public market. For the case of cryptocurrency, it has to do with technical knowledge. Another has to do with innovation and experiment. So cryptocurrency space is relatively young and evolving. So there are new cryptocurrency constantly emerging. And some of these, yes, they come with genuine user case, but most of them are just speculative ventures. I know this cannot be compared to more established cryptocurrencies out there. Another is more lack of a centralized authority. In the stock market, we have the SEC that is governing the market, but in cryptocurrencies, we kind of decentralize. And then we have the presence of the Securities Exchange Commission that says crypto is their jurisdiction. We also have the commodity markets that are in the marketplace also saying, hey, there are some cryptocurrencies here that are actually commodities. On the other way, we could also see cryptos like Bitcoin, which the commodities market may not say this is their jurisdiction, yet so will the SEC not say it's their jurisdiction, but yet it's just like gold. Gold may not be regulated by the SEC or commodities, but yet gold still has to operate under some laws of those countries. And then it now brings me to the fact that this can be a little bit parallel to the dot-com bubble. In the dot-com bubble, it was easy to create the internet companies and take them public, and it was fueled largely by a lot of speculation in anticipation for the future before, that dot-com crash that happened, and over 46% of the companies that went public never actually rose back, to be companies that existed until now. So there are a lot of cryptocurrencies out there, and this does not mean that they are going to survive. I think a larger percentage of the cryptos out there are just mere experiments. Some are just mere.
So looking at so Gilbert,
survive.
looking at over 2 million cryptocurrencies right now on CoinMarketCap, how many do you think are going to survive in the next 5 years?
I actually think that over 50% of the current projects that we have there won't survive. As a matter of fact, even among the top 100 cryptos right now, in the next 5 years, we are going to see some new guys take over that top 100. Yes, I know there are some more solid cryptocurrencies out there that are going nowhere. They have always been there in the top 10, but most of even the top 10 right now, the next 5 years won't be in the top 10. They may go down to like 100, 200, and down the drain they keep going. A lot of more new, better crypto project with better user case and management are going to take the floor.
All right, Gilbert, thank you so much. And I did check on recently added, and they were all meme coins, coming in, to the market at this time. But thank you so much, Gilbert Drokpata. It was great having your perspective.
Yeah, thanks for having me.
All right, thank you. So that's the show today. Visit channelstv.com for more updates. I'm Ladi Williams. From me, the team right here at Channels HQ. It's bye for now.